Daily bias is the most important concept that you'll ever learn, but it's also one of the most misunderstood ones. I used to think that daily bias was complicated too until I understood that it can be summed down into one simple question. And in this video, I'm going to show you exactly what that question is and how it is going to make finding the daily bias almost effortless. So effortless that even if you are a beginner, you can apply this. And yes, this applies in any market, and that is something that I'm going to prove to you in this video too. Now, what is the question that if we ask ourselves every single day, it will allow us to find the daily bias? This is something that took me years to figure out, but now has gotten me results like these and these. And it has boiled down into one question, and that question is, what is the market choosing to respect? And I'm going to tell you exactly what the market is always choosing to respect every single day. Basically, you'll have the answer to this question through just 3 key levels. But first, I want to talk about this question. What is the market choosing to respect? And how does this apply most of the time? Every time we have a trend, retail traders decide to trade counter to the trend. So every time that the market was moving lower, retail traders were saying that the market is oversold and therefore we have to move bullish, while I was shorting all the way down. And then once the market turned bullish, every time we would have a 2, 3, 4% move, retail traders would end up saying the market is now overbought. It's obvious that we're going to move down. I saw so many bullish retail traders as the market was moving down, and a lot of bearish retail traders when the market was moving bullish. And to prove to you that this is true right now, we are in the website called myfxbook.com, and we came into the community sentiment. This is where they show the orders that are now placed on the market with accounts linked to myfxbook. And you can see that one of the ones that is very extreme is Euro Japanese Yen, where 93% of traders are bearish. So you might expect that Euro Japanese Yen is very bearish because most retail traders are bearish. But actually, if we go to the Euro Japanese Yen chart, you see that Euro Japanese Yen is at all-time highs. And this is why daily bias is so crucial, because by traders understanding daily bias, they understand that the levels that are being respected are all of the bullish levels. Bullish levels keep being respected, and that's why the market continues going and forming new all-time highs. And so to understand what the market is choosing to respect, we need to look at key levels. And what are key levels? Key levels are areas on the chart where we expect a reaction from, such as order blocks, such as fair value gaps, and such as highs and lows. And I'm going to show you exactly what all of these are right now. An order block is simply a counter trend candle. For example, if the trend is bullish, every down close candle is going to be an order block. It doesn't mean that every single one of them will have to be respected, but you can see that the market came all the way down towards the order block and then reacted bullish. And fair value gaps are a 3-bar pattern when there's a lot of volatility in the market. So we have the first candle high, this is all on the daily chart. We have the third candle low, and you can see that there's a gap between the first candle high and the third candle low. And this is what we call a fair value gap. And you can see that this is where the market reacted from. And eventually you can see another one. So candle number 1, you grab the high, you grab the low of candle number 3, and we have the market reacting multiple times out of the daily fair value gap. And very quickly, in order to find bearish examples, we need to go to a downtrend. So for example, we have a bearish fair value gap, which is going to be the low of the first candle and the high of the third candle. If there's a gap, this is a bearish fair value gap. And then once the market breaks lower, what do we have? We have a bullish candle on a bearish trend. This bullish candle body is an order block in which the market comes towards and then moves bearish from. So that's a bearish fair value gap and a bearish order block. And now I want to show you the market reacting in both situations. If we look at the current price section, what is the market choosing to respect? Notice how we have a bearish order block that now has been disrespected. An order block gets disrespected when a candle closes below it with the candle body. So bullish order blocks are not being respected. And notice how this bullish candle has just been reacted from, creating a bearish order block, which means that bearish key levels are being respected, and so therefore our daily bias would be bearish. And what would we be targeting? We would be targeting internal lows, extremes, which are the wicks right before the swing low, and we're going to target the swing low. And once the market starts moving bearish, we continue with our bearish daily bias. Because this is the point at which so many traders start trying to call the low of the market, when in reality, the best thing that you can do when you don't know the daily bias is just say, I don't know. This is probably one of the most important things you can say in your trading, simply saying, I don't know. Because once we come towards a very extreme key level, where we have an obvious order block, this is where you start being a little bit more neutral, expecting the market to reverse. And this is where, instead of being bearish, you would become neutral. And now notice how there was a daily fair value gap right here. And this daily fair value gap just got disrespected. And right now we are at another daily fair value gap. So the question is this going to be disrespected? Because if it is, then our bias is about to switch to bullish. Why? Because the market is disrespecting bearish PD arrays, and it's choosing to respect a bullish order block. So therefore, let's see how the market reacts. We come back to the fair value gap. This is an inverted fair value gap, and we start reacting bullish. So the market is choosing to respect bullish key levels. And then the market gaps down, continues moving higher and higher. The market comes back to the fair value gaps, and now, once again, we are reacting out of a very important key level. We are reacting out of bullish fair value gaps. So the question is, are we going to continue bullish? And in this case, we expect the bullish reaction from here, right? Well, the market reacts bullish, but it fully retraces. And now you might say, well, why are you not using a perfect example? This is where I try to go against what everyone else does. Every time you see a trading strategy, you always see the perfect examples. I want to show you that even sometimes when the market is clearly reacting out of bullish key levels, it might still be wrong, and it happens. That is completely fine, because afterwards the market continues reacting bullish, so we continue reacting from the bullish key levels, and this is where, what would you do? You would target the all-time high once again, remaining with a bullish daily bias. And then you can see, look, we come towards the fair value gap. We also have a fair value gap a little bit lower, so there's the possibility that the market comes down, and we have this order block right here. These two candles form the order block. Then the market moves to the upside, and then we create another order block. We have a down close candle on a bullish push. The market comes down towards the order block and goes towards all-time high. And this is how I've been able to master daily bias. Now you might be asking, Kimmel, how will we do it when we are at all-time high? Well, let me ask you the question. What is the market choosing to respect? Right now, the market is still choosing to respect bullish key levels. So therefore, you would not flip bearish up until a fair value gap gets inverted, because that's when you start seeing very strong bearishness. Notice how once this fair value gap got inverted, we had the move to the downside. So right now, your goal is to continue longing up until the market proves us wrong. So we react out of the fair value gap, we create another order block, we continue moving higher, create another order block, so on and so forth. So you can see that daily bias can be simplified. And daily bias was incredibly hard up until I understood that it boils down into one question, which is, what is the market choosing to respect? Because we are just traders. We are here to trade the market. We do not dictate where the market is going to go. We don't have that sort of power. So what we have to ask ourselves is, what is the market choosing to respect? Now, if you want to see how I apply this with a strategy, I have Funded Trading Blueprint, where we guarantee that you get funded in 90 days. And we have the most insane guarantee ever seen in the trading industry. This is where I reveal my full trading strategy. I do daily market breakdowns, and I do weekly live trading streams. You will also get access to the private Discord, where you have 24/7 access to myself, and I've sent over 16,000 messages in the Discord just in over 1 year, because I know very likely you've had bad experiences with that. So with that being said, Daily Bias has completely changed my trading forever. That and prop firms. And if you want to check out the most cost efficient prop firm, then check out Funding Ticks, that with code Kimmel you can get up to 50% off. Hope you enjoyed. I'll see you in the next one. Peace.